What I'm certain of is that the fiat money world, I'm certain, is in extreme dire straits and collapsing.
Today we have Bitcoin maximalist Max Keiser giving us an update on how the Fed money printing is affecting inflation, why banks are collapsing, and what the crypto market can expect in the last few months of the year. With cryptocurrency going through a difficult time, Bitcoin's value will be put on full display before the halving of 2024. Investors and crypto analysts say that whenever there's a sell-off, to be aware of any projections that indicate a lower price point of the prevailing downtrend. Keiser has been warning people that fiat currencies would collapse and why Bitcoin is a significantly better store of value, which we're seeing play out in real time. The pricing on Wall Street continues to erode trust with investors, and we're starting to see the negative effects on the market as we head into the fourth quarter of 2023. Let's get into the interview with Max Keiser as he gives his prediction on the banking collapse and how this will affect Bitcoin in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
The adoption, in my view, has always been driven by fear and when banks collapse. So when the Cyprus Bank collapsed, for example, a few years ago, and they did a bail-in, and people's deposits were frozen or confiscated. And what we see in Lebanon now, you see banks shutting down, people going into banks armed and shooting, and
more countries want bail-in laws now.
They want bail-in laws, exactly. And so that, when people understand how risky keeping money in the bank is, that drives adoption. When banks fail, there's a wave of adoption into Bitcoin. What's happening in Europe and in Asia, people fleeing countries, they're fleeing countries like they're fleeing Russia right now. How do they take their wealth with them? They're not going to carry silver or gold bars, there's very limited. Fiat money, nobody's going to take rubles anywhere in the world, not in Europe. You can't even book a hotel reservation in Paris if you're Russian right now. So with Bitcoin, that's not a problem. You can put all of your wealth into the Bitcoin network and you can go anywhere in the world and you can keep it. So what drives adoption is, and what I'm certain of is that the fiat money world, I'm certain, is in extreme dire straits and collapsing. And therefore, I have no fear that the adoption rate of Bitcoin will continue. Technology usually goes through a cycle where this was the same in the internet back in the 90s. In 1995, 96, 97, the internet usage was maybe 100 million tops, 150 million. Paul Krugman was writing in the New York Times that it was a fad. It had no bigger impact in the economy than the fax machine. People in Hollywood, where I was at the time, they wouldn't put an email address, on their business card because they thought it looked too geeky. We're Hollywood, we don't want to look like a geek. And then within 6 months, you got 1 billion, 2 billion people on the internet. The Blair Witch Project hit Hollywood, and it was totally driven by the internet and became a $200 million grosser on a $50,000 budget. And the whole thing changed overnight. So with Bitcoin, I think we're at that hockey stick moment, really, where suddenly it goes from, 200 million people are using Bitcoin around the world. It's in every country around the world. And then 6 months later, it's like, actually, you've got almost 2 billion people using it because it fulfills a need. The need to have absolutely scarce, hard money that's completely portable, that is better than gold and certainly better than fiat money. And it's going to take care of itself because it fulfills a need that is becoming ever more pressing.
Keiser goes on to say that anytime a collapse happens, investors' timelines get distorted during periods of extreme volatility. The price of cryptocurrency can skyrocket and crash within just a few months. The recent international conflicts have caused global markets to remain volatile, and uncertainty has followed close behind. Keiser believes we are on the verge of a total financial collapse.
In my opinion, the date is getting closer at hand because we are now finished, as we spoke of earlier, with the 40-year experiment with an all-fiat system world. That really was an experiment when, in 1971, the U.S. closed the gold window with Nixon, and we went to an all-fiat world. The no fiat was referenced anything but other fiat. So it became a complete charade, a complete Ponzi scheme, essentially. And that experiment of an all-fiat world failed, and now it's ending. And now we're seeing, for example, the euro is disintegrating before our very eyes. The British pound is also looking horrible. Japanese yen, which was always the go-to currency for years for funding, and the funding currency for the carry trade, where I'm going to go borrow $1 billion in yen and put it into dollars and make 3%, and then leverage that by 30 times in my hedge fund and wrap it with some futures contracts and options, and I'm making a riskless 40% a year, and I don't get the taxed on it because hedge funds are the 15% carry tax arrangement, of which we never have anyway. So, and I got this huge gazillion-dollar house in the Hamptons, but I'm really adding something productive to the economy, right? So that game is over. Even the yen is collapsing, and certainly the emerging market currencies are not doing well. There's a mad rush into the dollars for the time being. You know, it's the cleanest shirt in the laundry, as they say. But this is all coming to a close. The commodity markets have entered a secular bull market. The commodity producers are in charge. And Bitcoin is a commodity. It's a synthetic, digital commodity, absolutely scarce commodity. It's the ultimate commodity. And since we're leaving fiat money epoch and entering the commodity era, the ultimate commodity is Bitcoin. So it's going to do the best. It's the best performing asset since inception against any asset out there, even with the current drawdown. It's still compounding at like 100% a year. It's still outperforming stuff, even with this 70% drawdown. They've had several of these. I lived through 80% drawdowns. And so it's going to continue to outperform. And so it's not a matter, as I said earlier, of when are people going to want to buy Bitcoin. It's more of a question of how quickly the false edifice of fiat supremacy collapses and there's nothing left to buy except Bitcoin if you want to preserve your wealth. That's what drives it, and that's what's happening. And it's happening right now. What's happening in Europe, in the war, you know, when they start talking about atomic weapons, Andrew, I mean, that's no longer a mild regional. That's the fear, right? That's serious business. You know, it's designed to be attacked, and I'll explain why this is important. Because you want to have as much energy thrown at Bitcoin in an attempt to override the system with what's called a 51% attack, because invariably that just means that it triggers all the participants in this network to equally fight back, if you will. So it's beautifully incentivized throughout the entire system. So if somebody really wants to throw a lot of energy in trying to attack Bitcoin, it's just going to stimulate other people to step up their protecting of the network, which means that the amount of energy protecting the network, the hash rate, keeps going up, and that means the security keeps going up, which makes it even better than fiat money and better than gold, which means the price goes up. So the more you attack it, actually, the more secure it gets, and the more the value it accrues. And so it's a genius in many, many ways, and that's one of the ways that the genius of the design works out. So when people say, "Whoa, you know, the U.S. or the U.K. is going to ban Bitcoin," I'm like, bring it on, because they're just going to waste a lot of money, the security is going to increase, and the price is going higher. So attack me, please. That's what it's designed for.
Wall Street and Silicon Valley are not doing what the early Bitcoin investors were doing in 2017. With 80% collapses so far in Bitcoin, the next few months will determine how it will bounce back. In the meantime, some experts predict an $15,000 bottom price for Bitcoin soon, seeing a recent downturn since its $30,000 price point in June. If their forecast comes true, it would inflict further pain on Bitcoin and the broader cryptocurrency market, which has seen around $500 billion wiped off its value in the past month. Most agree that Bitcoin will survive this cycle, but this is eerily similar to the dot-com bubble of the early 2000s. While most major cryptos are spending much of the day in the red, ongoing investor fears about inflation grows as central banks tighten monetary policy. What do you think about Max Keiser's prediction for Bitcoin and the banking crisis we're seeing unfold? Comment down below.